Anytime you see me on my channel with my money gun, you have to know we are talking about something very, 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 very serious. Whether you just started trading Forex 2 days ago or you've been trading for 10 years, the highest thing everyone uses in Forex to trade is what they call the Japanese candlestick pattern. And since I want you to be able to start making that money in Forex as soon as possible, that is why this video is dedicated. This entire video is dedicated to teach you on how to use the Japanese candlestick patterns to generate signals. So at the end of this video, you will be able to generate your own signals. All right. If you've joined Telegram groups or Telegram channels or Instagram and you buying signals from these fake gurus, by the end of this video, I promise you, you'll be able to generate your own signal. I'm going to teach you step by step on how you can generate your own Forex signals to be able to make that money in trading. All right. So with that being said, let's get into the video. Hello everyone, my name is Ndemaze Golof. On this channel, we talk everything about trading, business, personal finance, and tips to help you stay profitable as a Forex trader. So if this is your first time coming to my channel, then consider hitting the subscribe button below so that you can always be updated when I come out with content like this. Without taking much of your time, let's see what we have on today's video. On today's video, we're just going to go straight to the point. And we're going to be talking about what is a Japanese candlestick. We're going to be talking about that's the definition and the structure. Trust me, anything you do in Forex, generating your own signals, or even if you copy signals from somewhere, you still use the Japanese stick to be able to trade those signals. So we're going to talk about the definition, the structure, the Japanese candlestick patterns, because if you are able to generate a signal in Forex, what you use, if you are a technical trader, trust me, I've already spoken about the different types of Forex traders. If you are a technical trader, which 80% of Forex traders are technical traders, what you use to be able to generate those signals, what you use to be able to generate those alerts that indicate that, okay, this is the time to buy or to sell, is what they call the Japanese candlestick patterns. It's what they call a candlestick patterns. So a particular pattern can form, you can be monitoring a particular pattern, and once that particular pattern forms, it shows you that the market can be going up, or it shows you that the market can be going down. So we're going to talk detailedly about the Japanese candlestick pattern. Under the Japanese candlestick patterns, we'll talk about basic candlestick patterns, we'll talk about single candlestick patterns, we'll talk about dual or double candlestick patterns, we'll talk about triple candlestick patterns, and we'll also go on a live chart. We'll go on MT4 and we'll be able to demonstrate everything we've been talking about on a live chat. So also do that before the end of this video. All right. So let's see. They say, what is a Japanese candlestick? As simple as it is. You can see on my board, I have some things going up and down. Then here I have one funny guy, one funny looking guy here. So the Japanese candlestick is called it is called the Japanese candlestick because it was discovered in Japan. As easy as that, because in the 1980s, the highest thing which was being traded in Japan was rice. So they wanted a way in which they could easily predict their rice prices. They could easily predict the future prices of rice. So this guy came up with, this guy, Steve Nixon, discovered the Japanese candlestick. And what is a candlestick in general? Remember, a candlestick is a form of Forex chart. We already spoke on my previous videos. If you haven't watched, please go back and watch those videos so that you can be able to understand what I'm talking about. On my previous video, I did explain about different types of Forex chart and the evolution of a Forex chart. The Forex chart, when it started, the first one we just had was what they call a line chart. A line chart is just something like this, which is just a graphical representation of price over time. All right. After the line chart, what happened is, traders were unable to know the open price, the close price, the high and the low of a particular period. So they came up with what they call a bar chart. With a bar chart looks like this. It has bars, and the bars looks like this. You see, the bars look like this. So with a bar chart will look like this. And with the bar chart, you see, with this one, they were able to know the open price, they were able to know the close price, they were able to know the high price, and they were able to know the low price of that particular period. If we're talking about a 4-hour time frame, they were able to have those details. Good. Since they discovered now the bar chart wasn't easily readable. It wasn't easily readable. So they came up now with a modification of a bar chart. chart, and that modification of a bar chart was what they call a candlestick. All right, is what they call a candlestick. So that is how a candlestick was discovered, or that is how a candlestick came into existence. Because you can see here we have a candlestick, and you can see this one is easily readable. You can easily know the bearish candle, you can easily know the bullish candle, you can easily know the engulf. So you can easily read this candle, and within a particular period, you can know the open price, you can know the close price, you can know the high, you can know the low, which are details you can see if you are using a line chart. All right, so a Japanese candlestick candle is just a modification of a bar chart, which is easily readable and easily interpretable. All right, so with that being said, that is how a Japanese candlestick was discovered, or that is how that is why it is called the Japanese candlestick pattern. With that being said, let's see, let's go to the Japanese candlestick structure. So you can still call it the structure or the anatomy of a Japanese candlestick. The anatomy, how is it made up of? Because here we have we have a bullish candlestick. Let me go back. Here we have a bullish candlestick, and here we have a bearish candlestick. And on today's video, let me make this very clear so that the more you keep hearing about this word, at least you should be familiar with. I'm already using the word assuming that you already know most of this concept. If I'm talking about a bullish candle, it means that is a candle which was in an increasing market. A bullish candle is a green candle, or a candle which is in an increasing market, when the market was actually going up, when the buyers were actually active. And anytime I talk of anytime I talk of a bearish candle, bullish is like this. All right, bullish candle, it means the market was actually going up. And anytime I talk of a bearish market, it means the market was actually going down. And the way the bullish and the bearish is formed, the bullish stands for, it comes from a bull. Anytime a bull fights, all right, that means if he wants to kick you, if a bull wants to kick you, it kicks you from below with the horn. So it fights like this. It fights from below, or from below to top. All right, that is how a bull fights. So anytime a market is going up, they call it a bull market, because that is how a bull fights. And anytime a market, if a bear is fighting, a bear tries to smash you on the ground. That is why this one is from a bearish market. That is how the bullish and the bearish came into place. All right. So anytime I say a bullish market, it means the market is going up, and anytime I say a bearish market, it means we are talking about a decreasing market. I just want you to understand that. And anytime I talk about we're going to also be using demand and supply, because that is the basics behind any market movement. That is the basics. Other factors like news, economic data, political and socio-economical factors, they can only support the demand and supply of a particular currency. Because if you see a chart going up, the main factor behind that chart going up is demand and supply. Is the effect of demand and supply on that particular currency pair. All right. So we're going to be using those terms. I just wanted to make it very clear so that as we are going ahead, you will be able to understand what is going on. All right. With that being said, let's see the structure of a Japanese candlestick. You can see the bearish candle here. We have this sign, which is like this. This one is an increasing candle, and this one from year to year is a decreasing candle. All right. So we have a bullish candle and we have a bearish candle. And for any candle, for you to be able to call any candle a bullish candle, which is an increasing candle, it means the closing price of that candle is higher than the open price. So the price open, let's just assume at this level, this was 1.5, and the closing price at this level now is 1.8. So you see, the closing price is higher than the opening price, meaning the market opens at the lower price and close at the higher price. At the end of the day, between that particular period, if we are using this as a 4-hour time frame, that means between this particular period, the market was actually appreciating. Between this particular period, the buyers were in control. All right, and anytime the buyers are in control, what happened? The price increases. So the buyers were actually in control here. And even within this period, the market was able to push up to this particular level, but the sellers came in, pushed the market down to this particular level, producing what they call the high. So even though the market closes at this particular level, the buyers were able to push the market up to this particular level, but the sellers came in, more supply came in, outweighs the demand, then the market was pushed back to this particular level, producing what they call the wick, all right? Producing what they call the wick. You can call this the wick or the shadow of the candle. So this is the wick or the shadow of the candle. The same thing happens below. Even though the market was open here, there was within that 4-hour period, because this candle stands for 4 hours, or if we are talking of a daily time frame, this candle will stand for 1 day. So let's just assume this is a 4-hour time. I mean, even within that 4-hour time period, even though the market was open here we have our open, even though the market opened here, but there was a point in time where sellers tried to come in, or more supply came in, and the price dropped. The price dropped right down to this particular level, but buyers say no. They came into the market and they counteracted that force, pushed the price back to this particular level, producing what they call a low. All right. So here, the main terms you should be able to take from here, we have what they call the open price. All right. We have the open price. We have the open price, which is the price they mark that particular candle. If we're talking of the 4-hour time frame, it is the price that particular candle opens. All right. We have the open price. We have the closing price. So by the end of 4 hours, if we are talking about 4-hour time frame, what price does that particular candle close? Then even within that period, what is the higher price which the market was able to attain? We have what we call the market high. And within that period, what was the lower price the market was able to attain? We have what we call the market low. All right. So you have to be able to take down these 4 keywords. We're going to be using them over and over throughout this course, throughout this episode of Candlesticks, which will cover everything you need to know about candlesticks from A to Z. From the start to the end, everything you need to know about candlesticks will be covered on this particular video. All right. So with that being said, you have to be able to take down these 4 keywords. All right. So and why is it even called a Japanese candlestick? All right. I hope most of you already know why it is called a Japanese candlestick. Why? Because you can see I already explained this candle, and this is a normal candle in real life. All right, this is how a normal candle, when you light a candle in your house, it looks the same like this. Within that candle, you have what they call the body of the candle. This is what they call the body of the candle. This is the body of the candle, and this is the body of this candle. The same thing is the body, the same thing is the body. All right, this is the body of the candle, this is the body of the candle. The same thing here, this is the body of the candle. And we are talking about the wick. This is the wick of the candle, this is the wick of the candle, and here where you see the light, is the wick of the candle. All right, so that is how the name also came into place, because the structure of those bars look exactly as a candle. That is why they call it a candlestick. And since it was discovered in Japan, they call it a Japanese candlestick pattern. And the same explanation I gave for a bullish candle is the same explanation that goes for a bearish candle. But the only difference between a bullish and a bearish candle is that for a bearish candle, since it indicates a decrease in the market, it means the closing price will be lower than the opening price. So let's just assume if this was 1.6, which was our open price, you can see the market actually dropped from there to here. If this was 1.6, then the closing price will be around 1.5. Meaning the market opens here, but before it closed, the price was lower than this. And if the closing price is lower than the open price, it means that within that particular period, the currency exchange rate was actually dropping. And if the currency exchange rate was dropping, what is it going to form? It forms a bearish market. And we can see here we also have our low and we also have our high. All right. I hope I've been very clear on that particular one. Let's go to the next thing. So now let's talk about what is the most important thing on today's video, which is candlesticks pattern. Please follow me carefully, step by step, and by the end of this video, you're going to be able to create your own candlestick patterns. All right. By the end of this video, you will be able to create your own signals. You'll be able to open your MT4 and create basic signal and place trade without asking for and without relying on any other person to show you those signals. That is why on this channel, you know me very well. You know the logo or the acronym of this channel. On this channel, I teach you how to fish instead of giving you fish. And part of teaching you how to fish, by the end of this video, you're going to be able to fish by yourself. You're going to be able to create those signals by yourself. Those signals you see people say, come and join my signal group, come and do this. I'm going to teach you by the end of this video. If you don't know how to create those signals by the end of these videos, then I don't think I'm qualified to stand here and teach you guys. So please follow me step by step. And one thing that will enable you to be able to generate those signals by the end of this video, that will enable you to start making money in Forex, is what they call candlestick patterns. Candlestick patterns. If you can understand candlestick patterns today detailedly, then I'll be so happy. And what is a candlestick patterns? Anytime you open your MT4, right, you can see here we have our MT4 chart. Anytime you open your MT4 and you see the chart going up and down, you see the prices going up and down, what will enable you to be able to say, no, okay, this is time for me to buy, or this is time for me to sell, will be a particular pattern. That particular pattern can be something we have here, maybe a spinning top, or maybe a spinning bottom, or a spinning top. Don't worry about these names. I'll come to tell you guys about about every other candlestick patterns which we have. So it is a pattern that will enable you to be able to generate those signals. And you have to be able to have experience. You need a lot of experience to be able to tell patterns that work and patterns that don't work, because many patterns are formed in the market. If we are talking about a daily time frame, within a day you have hundreds of patterns that will be formed. But now you need experience to be able to choose patterns that work and patterns that don't work. Because some patterns, if you choose without having experience, you might blow up your account. But there are some patterns that are very clear that with experience you'll be able to know. You can bet all your account with confidence, knowing that these are what we call magical patterns. So talking about patterns, let's start with we're going to have 4 types of patterns. By the end of this episode of the Candlestick Bible, or everything about the candlestick, we'll have 4 different types of patterns, which one of these patterns, one or a combination of these patterns, can give you the ability to buy or sell a particular currency pair. The first type of patterns we'll have is what they call basic candlestick patterns. From how the name goes, basic candlestick, that means it's just a basic candlestick pattern that will show you, that will tell you to buy or sell. And coming on basic candlestick pattern, the first one we have here is what they call the spinning tops. All right, is what they call the spinning top. And what does the spinning tops looks like? That's what I say. It shows indecision between buyers and sellers. I'll explain to you guys about this one very soon. Spinning tops are usually potential reversal patterns. All right, let me explain. Let's come with me. This is what they call spinning tops. It can either be a green, a red, or a blue, or a black candle. Green will always stand for a bullish market, and red will stand for a bearish market. White will stand for a bullish market, and black will stand for a bearish market. So don't be confused when it comes to these colors. All right. So now come here with me. You can see the market was actually going down, and at this particular level, we have this particular candle. This particular candle is what they call the spinning top. The spinning top, why? For you to be able to call a candle a spinning top, the distance of the 2 weeks should almost be the same. All right, that means the 2 weeks should be the same. You can see here we have a week. This is a week. And here, from year to year, we have a week. I already explained to you guys the meaning of a week. A week is just a week or the shadow of the candle. And the body, you can see the body of the candle. The body, this is the body of the candle. The body of the candle is very, very small, while the wick of the candle is very long. All right, we have wicks of the candle on the opposite side of the body. And let me explain to you guys how this candle is like this. The open price, since this is a bullish candle, the open price was somewhere here, and the closing price is just still here, because the open and the closing represent the body of the candle. So this was the open price and this was the closing price. So the market opens here and it pushed right up to this particular level. And what happened? Immediately pushed right up to this particular level. What happened? The sellers came in and pushed the market back to this particular level. On the opposite side, the sellers pushed the market right down to this particular level. What happened? The buyers came in, pushed the market back to this particular level. So you can see a force, you can see a counteracting force that is happening. The sellers are pushing the market down and the buyers are pushing the market up. So at the end of the day, if we're talking of a 4-hour time frame, by the end of 4 hours, there was an indecision. This is the key word you should be able to pick from this type of patterns. There was an indecision in the market. So there was no decision. Nobody, if we're talking of a talk of war, by the end of 4 hours, nobody won the battle. All right. So by the end of 4 hours, there was no winner. So there was an indecision in the market for you to really say, okay, the buyers were in control or the sellers were in control. So anytime you see a candle like this forming, that is a potential reversal signal. Oh no, not a signal yet. Sorry about that. Not a signal. It's still a sign. So anytime you see a candle like this, that is a potential reversal sign. What you have to be able to watch is the next candle that comes after that. All right. If the next candle that comes after this, let's just assume the market is going up. The market is going up like this. Then you see a candle like this form. The next candle that comes after this will be what we call the confirmation candle. If the next candle that comes after this is still a bullish candle, it's still a bullish candle that is still going up, it shows you that there are still more buyers in the market. So after the fierce battle between the buyers and the seller, which there was an indecision here, the buyers are still in control. If you have a bullish candle, all right, let me change the color so that you can better understand. Let me change the color. So good. So if the market has been going up and after you see a spinning top, you see a candle like this. If you see a candle like this, it's going to be something like this, exactly like this. If you see a candle like this with a wick here and the wick here, so this is an example of a bullish candle. If you see a candle like this after this one, what does this signify? It signifies that after the indecision candle, more buyers have come into the market. And anytime you know there are more buyers in the market, the only decision you should be doing is buying. The only thing you should be doing is buying. Anytime you know buyers are in control, the only thing you should be doing is buying. All right. So this should be a potential. This is a sign. This is a sign to tell you that, okay, a signal is to be formed. Then the confirmation candle is this one. So if it comes on and it's bullish, this is a signal. All of this now it combines to form what they call a signal. All right, to form a signal. And what signal is formed here? A buy signal. So you see how simple this thing is. You just choose to make it complicated. People just choose to make it complicated for you. But this is how simple it is. It is as simple as this when you are able to explain it to someone or when you know how to deliver the information to someone. It is as simple as this. Go to your MT4, open your MT4, you're going to see the same thing over and over, the same patterns over and over. All right. Now we're talking about a buy signal. Let's talk about a sell signal. All right. Let's go back to a sell signal. So let's go back here and pick red. Because red is let's pick a red candle. So let's pick red. And if the market is going up, remember we're talking of the market going up. And then after this candle, you see a candle form like this. Good. You see a candle form. This is a typical example. You see a candle form exactly like this with a wick here and the wick here. Let me put the wick. So you see a candle form like this with the wick. This is going to be totally red, with the wick here and the wick here. This is a kind of candlestick we call a bearish engulfing candle, or let's just call it a bearish candle. So if you see a candle like this after an indecision candle, this was an indecision candle. Then after that indecision candle, you see a candle like this forming. What does it tell you? It tells you after the buyers and the seller agrees to disagree, the people who came after that and won the battles were what? The sellers. So there were more sellers. There were more sellers in the market after this fierce battle. And if there are more sellers in the market, it means there is more supply. Anytime there are more sellers in the market and there is more supply, the only thing you should be doing is to be selling. So at that particular point in time, you should have sold somewhere here. You put your take profit somewhere here. Stop loss somewhere. You put your take profit, somewhere here. Stop loss here, and that is it. And that is what that generates a buy signal. All right, as easy as that. That is how you can easily generate a signal. But this is just the tip of the iceberg. This is just the tip of the iceberg. We are still coming to more interesting patterns. This is just the tip. We are coming to more interesting and very reliable patterns that you can easily see. So with that being said, you can see here. Let's put our color somewhere. Let's put it somewhere here. Yes. So you can see here, this is the same pattern here. This is the same explanation I was giving you. The same thing happened here. The same thing, the market was going down, then after this indecision candle opened, where there was no decision between the buyers and the seller. And then what happened after that? You saw this candle came in. This is another pattern. So we had a combination of two different patterns. This pattern is called a hammer. All right, this is called a hammer. A hammer came in, and a hammer is a key reversal signal. So a hammer came in, indicating that even though there was an indecision here, the decision here is that the next candle that was formed, more buyers came into the market, but sellers came into the market. You can see the sellers pushed the market right down to this particular level, but the buyers pushed the market up, forming this particular candle. Anytime you see a candle in the market like this, all right, because this is an example. This is, if I have to enlarge this candle, this is how it looks. So anytime you see a particular candle like this is a key reversal sign. This is a key bullish reversal sign, because it shows you that even though the buyers, or even though the sellers push the market right down to this place, the buyers push it back to this particular. And at the end of the day, the people who won the battle were the buyers. So immediately after that, what happened? The market went up. So you would have bought somewhere here, stop loss here, take profit, you are already out of the trade. Then those are spinning bottom, because it happens at the bottom. This is the same explanation goes for spinning tops. The market was going up. After the market was going up, what happened? You see what we call spinning tops. Spinning. This is the same candle. This was still an indecision candle. You can still be two indecision candle on the same place, because you can see this was the first indecision candle, and this was the second indecision candle. And now we are waiting to see what the next candle is going to tell us, because the next candle is going to be the confirmation candle. And the next candle, see what happened. The next candle was a heavy drop in the market. And if I have to enlarge here, you see the market drop right down to this particular place. So you would have sold somewhere here, you put your stop loss somewhere here, take profit here, the risk to reward of maybe 1:5, and you are already out of the trade. As simple as that. As simple as that. All right, so that is that about that particular pattern. Let's go to another pattern, which is called another form of a basic candlestick pattern, which is called the marubuzu. All right, the marubuzu, you can see anytime you see a candlestick like this, this is just how it looks. A marubuzu has no wick. The only thing you have to be able to know about this pattern is that it has no wick. Sorry about that. Let me go back here. So it has no wick or shadow. So it doesn't have a shadow. That is the characteristics of this candlestick, because you can see, as simple as this, it doesn't have any wick or any shadow. It means if the market was open here, you can see the buyers came in. This was the open and the close for a bullish candle, and this was the open and the close for a bearish candle. What happened? You can see for the marubuzu, the market, it means the market opened here, and the buyers, the force of the buyers was so powerful. So there was no room for the sellers to even take any share of the market. And the same thing happened here. The market opens here, and there was a big fall. This normally happens maybe after news or when there is high volatility in the market. The market opened here, and there was a heavy fall. That means there was no room for the buyers to even have any share of the market. So the sellers were completely in control, or supply dominated this particular market. So the same explanation is for this. The same explanation goes for this one. The market opens here, and the buyers came in immediately, pushing the market up, giving no room for the sellers to even control any share of the market. All right. And anytime you see this kind of candle, if you are in a bullish market, if you are in a bullish trend, let's talk about trends. If you are in a bullish trend and you see this kind of candle, then it means the buying pressure in the market is still stronger than the selling pressure. And anytime you see this particular structure in a bearish market, it means the selling pressure in the market is still stronger than the buying pressure. All right. What if we are in a downtrend? What if the market is actually going down, and then we see something like this? What happened after that? It means this is the first signal. If the market is actually going down, the market is actually red, and then out of a sudden you see a candle like this, what does it indicate? This is the first sign. This is the first sign of reversal. Remember, I said for a signal to be generated, you need a first sign, then a confirmation. All right, that is the formula. You need a structure. For a signal to be generated, there are three things involved. You need a structure, you need a sign, and you need the signal. So three things. The first one you need here is a structure. So if we're talking about trading, maybe we're using support and resistance, maybe we're using key level, maybe we're using demand and supply levels. Then we're waiting for the market to get to that particular level. When the market gets to that particular, let's just assume the market was actually falling. Then when it gets to that particular level, you see a candle like this. What does it indicate? It means the buyers are totally in control. That is the first sign. Then after that, since we already know the buyers are totally in control, if the next candle that comes after this is a bullish candle, is still another bullish candle, that is a buying signal. That is a buying signal. So we've had our structure, our sign, then our signal. It goes like this: structure, sign, and signal. All right. Our structure, we can be using support and resistance. Then the first sign you can have here is this candlestick pattern, which here we're talking about the Marubozu. All right. Then the signal will be the confirmation of the sign, and then the next candle that will come after this. So that is how you can see. They say the Marubozu just means there is no wick or shadow from the bodies of the candle. It has just the body, no wick or shadow. A Marubozu can either be a continuation, or a reversal sign, depending on where it appears on the chart. I already explained. If the market is actually going up and you see a candle like this, it is a confirmation that there is still high buy pressure in the market. And the market is going down and you see a candle like this, the red one, it means there is still high selling pressure in the market. And if the opposite happens, the market is actually going down and you see this instead, it means even though the market was falling, the buyers have jumped in. The buyers have come into the market and they are now having a greater share of the market. The same thing will happen if the market is bullish and you see this red one. The same thing. This is our MT5. All right. And if we have to check our MT5, see what happened. The market was actually going down. The same thing I was explaining. The market was actually going down, and at this level, what happens? See, this is the candle. It has no wick. That is why it's called the Marubozu. All right. Here, you see the same candlestick pattern happened. This is our first sign. The market was going down. We could be using, maybe this was our support and resistance. And we are waiting for the market to get to this particular support so that we'll have a confirmation to buy. When the market got to this particular support, what happened? We saw this bullish candle, this bullish Marubozu candle. Middle this bullish Marubozu candle form. This is the first sign. The second sign is the next candle that came after that was still a bullish candle. We would have bought somewhere here. Bought, stop loss, take profit, boom. By this time, we must have been out of the trade by now. So you see, this is a key signal. That is how you combine structures and patterns to be able to come up with a signal. The same thing happened here. The market was actually going up from year to year. Let's keep our support line. Let's keep our support and our resistance here. All right. This is our support and resistance because you can see the market is bouncing from year to year. So here we are waiting. Let's just assume the market was still here. And we are waiting for the market to get here so that we can have a decision to either buy or sell. The market got here. What happened? When the market got here, we had the same candlestick pattern. We had the same pattern. And anytime, if I explain very clearly here, that if the market is actually going up, if the market is going up and you see this big falling candle, you see the bearish Marubozu, the red one, you see the bearish Marubozu, it means what? It means the buying pressure is already off. The buying pressure is finished, or the buying power is already finished, and the people who are in control at that particular point in time are the sellers. Or supply is more than demand at that particular level. And anytime supply is more than demand, what happened? The price will drop. The next candle came in and confirmed that. The next candle that came was what we call an inner candle. All right, was what we call an inside-out candle, and this is a key candle that support that the market is going to find. After that, what happened? The market drops. All right, so you see how you can use this single basic candlestick patterns to generate a signal. Let's go to the next one. The next one we have is what they call the doji. The doji. Oh, sorry about that. Let's go back. So the next one we have here is what they call the doji candle. The doji candle, let's not waste time on this one. The doji candle is just a candle, it's just like a cross, it's just like this. So the key characteristics between a doji candle is that the open price and the close price are all on the same level. All right, are all on the same level. So the open price and the close price of a doji candle are all on the same level, or they all have the open price and the close price is all the same. If we have 1.5 here, then the market open at this particular level at 1.5, and at the end of this period, if we are talking of a 4-hour time frame, by the end of this period, the market closes at the same point. But within this particular, you can see the market went up here, the sellers pushed the market back to the same buying level. At this particular level, the market came right down to this particular level, the buyers pushed it back to this particular level. So you see, the sellers are pushing the market up, the sellers are pushing the market down, the buyers are pushing the market up. At this particular level, what kind of candlestick is this? An indecision candle. Nobody won. No, at the end of the day, nobody won the battle. The battle was a neutral battle. So anytime you see a dodgy candle, you need to be very vigilant to watch the next candle that is coming after that. That is why they say dodgy candles have the same open and close price. The same open and close price. This is something you have to note. And then in this situation, neither buyers nor sellers were able to gain control of the market. The same thing I've explained to you guys. And then always pay attention to the next candle that forms after a doji candle, because that candle is what? The confirmation candle. Good. Since I've already explained to you the characteristics of a doji candle, come to my MT. Let's go to MT4 and see. This is MT4. This is our MT4 chart. You see the price is going up and down, up and down, up and down. And if we have this, our key support, our key resistance, we have another support here, or we have this as key level, maybe key support 1, support 2. See what happened. The market was actually in a consolidation, and at this particular level, we have what? We have a doji candle. I mean, the open and the close price of this candle was the same. So we have a doji candle here. And I said, anytime you see a doji candle, pay attention to the next candle that forms after that. The next candle that forms after that. If the buyers win the battle of the next candle, then that's a buy signal. And if the sellers win the battle of the next candle that comes after that, then that is what? That is a sell signal. Immediately after the doji, what happened? Look, immediately after the doji was formed, what happened? We had a big ass bullish candle. And after this big candle, which was an indication that after there was an indecision between the market, the next candle that came was what? A bullish candle. What happened? See what happened after that? The market went up. This is not magic. It happens every day. Open your MT4, do as many back testing as possible, and let me know on the comment section below how many signals you see, how many trades you would have taken, how much money you would have made if you knew about these patterns, or if you knew how to use this pattern accurately. There's a difference between knowing these patterns and knowing how to use them, or there's a difference between explaining this pattern to someone and you knowing how to use this pattern to generate the right signals. All right, because see what happened here. You would have bought somewhere here, put your stop loss here, and your take profit somewhere here. That's a risk to reward of about 1:5. So if you were risking $100, then you'll be making about $500. By the end of the trade, if you risk $100 here, by the end of the trade, you'll be making about $500. As simple as that. Even if you place the next trade and if it was a loser, you wouldn't mind. Even if you place the next 4 trade and they were all losers, you wouldn't mind, because you know the one trade that you win will be able to bulldoze all those small losers. That is why they say have small losers but heavy winners. All right, there can be sometimes, even if my strategy gives me 40% accuracy, I'll still be a profitable forex trader. Why? Because the one winner that I have will be able to bulldoze, will be able to cover up all those small losers that I used to have. Because if you hear any person comes up to you and the person tells you he or she is having a forex system or a strategy that doesn't make any losses, or that doesn't make any losses, or doesn't place any losing trade, then run away. That person is trying to scam you, or that person is trying to sell you something. No matter the system you have in forex, the system must be able to have some losing trade at a point in time. But what gives us the edge to keep on making money every day is the ability for that system to make more winners than losers, or the system for the ability for that system to give us a risk to reward in such a way that the few winners that we have are able to cover up the small losers that we had. So at the end of the day, we'll still come out profitable. So you see, that is simple. That is the doji. After that, you saw that is how the signal was generated. All right, good. Let's go to now. We've already spoken about, remember I said there are four candlestick patterns, and no matter what you are trading, no matter the kind of trader you are, you're going to use these 4 candlestick patterns to generate your signals. We've spoken about, and the 4 candlestick patterns, we have basic candlestick patterns, which I have just explained. Under basic candlestick patterns, we have the doji. We've just explained the doji. We have the marabozu. We've also explained the marabozu. And we also have spinning bottoms and spinning tops. You should be able to understand this very clearly. After that, after the basic candlestick patterns, let's go to what we call single candlestick patterns. That is a candlestick patterns in which a single. That means in this particular candlestick pattern, you need just a confirmation of one candle to be able to give you a clear direction in which the market is going to take. All right. So with that being said, under single candlestick pattern, you can see here we have what we call the hammer and the hanging man. All right. The hammer and the hanging man. So this one is very, very clear. This one is it can either be bullish or bearish, because here they say the candles have different meanings depending on past price action. For example, if the market is actually going down, and then at the end of the trend you see you see the hanging man, that is a clear indication. This hanging man is also known as the kangaroo. It's also known as the kangaroo tail. Maybe you've heard of this somewhere. It's also known as the kangaroo tail. And the kangaroo tail can either be formed at the support or at the resistance. And anytime you see a kangaroo tail, that is why it is having this long tail. A kangaroo tail, they call it kangaroo tail because it is a candle with this and then having this long tail. So you can call this the hanging man or the kangaroo tail. The hanging man can either occur at the support. Then when we go to the next pattern, you see what they call the shooting star. The shooting star can occur at the resistance, all right? So let's just assume the market is going down and you see this hanging man. What does this indicate? This is very clear. It means the market was open right, because this is the body of the candle, this one. It means the market was open here. The sellers came into the market, pushed the market right down to this particular place. Then the buyers came in with force, came in with buying pressure and pushed the market right up to this particular place, right up to this particular price. And at the end of the day, the wick of the candle is longer than even the body of the candle. All right, showing you what? Showing you the price in which the force in which the buyers were using to counteract this market was more than the sellers' forces. And anytime you see this particular candle, if it occurs in a key resistance level or if it occurs at a key support, that is a key confirmation of a reversal. All right. Remember, I will always say this: for you to be able to have accurate signals using candlesticks, make sure you combine candlesticks with a pattern. Make sure you combine candlesticks with a structure. And the key structure, the number one structure that you can combine candlestick with to have solid signal is what they call support and resistance. So whether you have a trend, you have a channel, whether you have a channel, a consolidation, a downtrend, or uptrend, you obviously have a support and a resistance. A support and resistance, you can either have a trend that is like this, or you can have a trend that is sideways. No matter what it is, no matter any direction the trend have, you obviously have a support and a resistance. All right. So always combine. Always, please note this down. Please note this down. This is very important for you to be able to have solid signals. Always combine candlestick patterns with a structure. So now let me explain what I'm talking about here. Let's just assume you can see here we had our resistance and here we have our support. This is very clear. We have our support here and we have our resistance here. The market was actually going up, and when it came to this particular level, what happened? What happened? We had a hanging man. The hanging man this hanging man was showing you very clearly that the buying pressure was down at this particular level. And after that, what happened? The market dropped immediately. All right, the market dropped immediately. Even when the market came back to the particular support here, there's another candlestick pattern that was formed. You have what we call an inner bar. we had an inner bar. I'll explain. We're coming to this particular pattern. That's why we won't pay most attention to this particular one, because here, this is what we call an inner bar, where the previous candle and the present candle are more than the candle in between. So you had an inner bar, and then after that, you have what we call a bullish engulfing candle. That was still a key signal, and the market went up immediately. All right. So you can see when you are using support and resistance, when the market gets to a particular support, you look for a confirmation. If you have a confirmation, that confirmation will be given to you by a particular candlestick patterns. That is why by the end of the video, you'll be able to have an idea of all the candlestick patterns, so that if the market comes back to the support, on the channel, I'll still teach you on how to draw support and resistance levels accurately. So you should be able to draw your support and resistance level accurately. And when you're able to draw your support and resistance level accurately, what you are using now to confirm as a confirmation to generate a signal is what they call candlestick patterns. So a pattern will give you that confirmation to say, okay, remember the steps to generate a signal. You have what they call a structure, a sign. You have what they call a structure, a sign, and a signal. All right. So those are the three things you have to be able to use. Our structure is support and resistance. The sign we have here is what? Is a hanging man. Then after the sign we had, which was a hanging man, the signal is what? A buy signal. So let's start with the first. Anyway, when we go to the next one, which we have an engulfing candle, that will be able to explain very well. Before we even go to the next type of a single candlestick pattern, please, if you are getting some value from this video, please leave a thumb up on the video. It's going to mean a lot. If you are getting some value from the video, please leave a thumb up on the video. And if you forgot to smash the subscribe button and you haven't subscribed up to now, please hit the subscribe button below so that you can always be updated when I come up with content like this. So if you have already subscribed and hit the thumb up, let's move to the next slide, which on this slide we're going to be talking about the inverted hammer and the shooting star. Here the highest thing I want us to pay attention to is the shooting star. All right, is the shooting star. Remember on our previous video we did spoke of a hammer. A hammer is just the opposite. The hammer is just the opposite of a shooting star. A hammer will just be like this. All right, a hammer is just like that. So this is a hammer. This is a hammer and this is a shooting star. The reason why I say let's focus on this is because if you go through your MT4 and you do back testing, these two structures, number 1 and number 2, the shooting star and the hanging man, they never fail. All right, the shooting star and the hanging man, they never ever fail. That is why, okay, let's just let's go back to our MT5 and let me explain to you. Let me show you why these two signals will never fail. And the structure, let's use support and resistance as a structure. Here we have, let's just assume here we have our support and here we have our resistance. And here we have our resistance. The market is bouncing here, bouncing here, bouncing here. When the market came back here, when the market came back at a particular support, at a particular resistance, we were looking for a buy signal. And that buy signal we were looking for, we had this particular one. This particular one is called a shooting star. It's called a shooting star. And the reason why it is called a shooting star is because you can see at this particular level, the candle was open somewhere here. This was the open price. This was the close price. But within this time period, the market pushed up right up to this particular level. Then the sellers came in and pushed the market back to this particular level. You can see how, so the wick of the candle is longer than the body of the candle, because you can see the degree at which the sellers were able to push that market down. So this is the first sign. We already have our structure, which is support and resistance. Now we are looking for a sign. Our sign is the shooting star. We already have a shooting star at a key level. So anytime you have a candle that looks like this at a key level, you should be looking for a reversal. If the market is bouncing on support and resistance and you have a shooting star, these are key points you should write down, because when you do back testing, you see it over and over and over. Anytime you see a shooting star occurring on a key structure, occurring on a resistance, if you see a shooting star, that is a sell signal. All right, and if the market is going down and at a particular support and resistance, this is our resistance. All right, our resistance, and here is our support. So when the market comes back, if the market comes back to a support and you have now what we call a hanging man. A hanging man looks like this. And you have a hanging man. If it occurs at a support, that is a key buy signal. So that is how you can, these signals are so powerful. The signal between a shooting star and the hanging man are so powerful. Because if I just open my MT4 and the market is bouncing on support and resistance, if the market goes up to resistance and I see a shooting star, I sell without even thinking twice. All right, I sell without, because the resistance is already there. And then I've had another point of confluence, and that point of confluence is a shooting star. I sell without even thinking. And if the market comes back to the particular support and I see a candle that looks like this, no matter the name, even if you can't remember the name, if the market comes back to the support and you see a candle that looks like this, you should be able to know the buyers are in control. Because see how the market went down to this particular level, but the buyers came in with force and pushed the market right up to that particular level. So the buyers are in control, and you should be, if you buy at that particular level, you place your stop loss, go with the risk to reward of 1:2 or 1:3. At the end of the day, 90% of the time, it will come out to be a winner, or it will come out to be a winning trade. All right. So with that being said, let's see another one. Under base single candlestick patterns, we also have what we call that about single candlestick patterns. And let's just have a recap, please. Even though the video, we're trying to cover everything, but I don't want you to lose track of anything. All right. I don't want you to lose track of anything, because at the end of this video, search the whole of YouTube, search the whole of Google. Anything you learn about candlestick, we're going to be able to cover it in this particular video, and we'll cover it in the simpler way you can think of, in a simpler way you'll be able to understand. All right. So let's not lose track of what we are talking about. We are talking about candlestick patterns, and patterns are you'll be able to generate a signal based on a particular pattern which you see. We've spoken about basic candlestick patterns. We've spoken about single candlestick patterns, which you just need but one candle, like the shooting star or the hammer, which I just explained. You need but just one candle to confirm a reversal. We've spoken about that particular candlestick pattern. Now we are talking about dual or double candlestick pattern. From just the name, it means you need at least a combination. You need a combination of two candles to form one pattern. All right. For a dual candlestick pattern, you need two candlestick patterns, two candles to form one pattern. All right. So you need at least two. You need two candles. That is why it is called a dual candlestick patterns. As easy as that. There is no other explanation. As easy as that. That means for a dual candlestick pattern formation to be formed, you need at least two candles to form one pattern. All right. So now since you've already understood how a dual candlestick pattern is formed, let's start with the most used candlestick patterns in the whole of forex, in the forex industry. In the forex industry, the most used double candlestick or the most used candlestick pattern is what they call engulfing candles. All right. It's what they call engulfing candles. You're going to be able to, you're going to see this all the time, because anytime the sellers come into the market and they gain a greater share of the market, majority of the times they will form what they call a bearish engulfing candle. And anytime the buyers come into the market and they gain a greater share of the market, 90% or majority of the times they will form what they call a bullish engulfing candle. Let's explain from here, from the candles on the board. You can see this one, the first one is a bullish engulfing candle, and then this one is a bearish engulfing candle. Good. And the explanation, let's just assume the market is going down, right? The market is actually going down. And then at this particular level, you see this particular candle. These are the characteristics of an engulfing candle. For you to be able to term a candle or to call a candle an engulfing candle, the next candle should completely engulf. That is why it is called an engulfing candle. The next candle should completely engulf the previous candle, because you can see here the bullish candle was formed, and at the closing of that bullish candle, it completely engulfs. That means it completely covers the body of the next candle should completely covers the body of the previous candle. At this point in time, don't focus more on the wicks. You focus on the body of the candle. So for a bullish engulfing candle to be formed, the body of the present candle, which is the bullish candle, should completely cover or should completely engulf the previous candle. And you can see here the market was actually dropping, and at this particular level, the next candle that came out, which was a bullish candle, completely engulfs this one. So this pattern is called a bullish engulfing candle. And the same thing will happen for the bearish engulfing candle will happen if the market is actually going up. Then out of a sudden you see a big candle just completely engulf the bullish candle. The same thing happens here. The market is actually going up. Then when it gets to this particular candle, the next candle that came out completely was a bearish candle, which completely engulfs the bullish candle. And if the candle that completely engulfs the previous one forms that particular pattern, and at this particular point you see the bearish candle completely engulfs the bullish candle, forming what? A bearish engulfing candle. A bearish engulfing candle. And now you can even see here, if you were trading, if I was using a structure, the system to generate a signal. The system to generate a signal, you need a structure, a sign, and a signal. So it has to be this. You need a structure, you need a sign, and you need a signal. Our structure here, let's just assume we're using support and resistance. The support is somewhere here, and when it gets to the support, the sign that we have is what? A bullish engulfing or a bearish engulfing. That is a sign. And what is a signal? A sell signal. You can then send this to your Telegram group. You can then send this to your brother, to your uncle, to your mom who is trading, and say, okay, mom, buy this particular currency, because that is a sell signal. If you sell, you can see here, your stop loss will be able to go above that bullish engulfing candle, and your take profit will go somewhere below, depending on your risk appetite. As simple as that. I enjoy, if you can enjoy this content the way I enjoy presenting it to you, then I'll be so happy, because this thing is so interesting when you're able to understand what is going on. So now this is our MT5. All right, I want to just explain bullish and bearish engulfing candles on MT5. The market has been bouncing. All right, and now let's start with the structure, because what did I say? For you to be able to come up with a signal, you need a structure, a sign, then a signal confirmation. Good. Our structure here, let's assume we have support and resistance. This is our resistance, and now we have our support, the key levels that we can see. We have our support somewhere here. All right, so this is our structure. The market is bouncing here and here and here. That is the first thing we have now, is our structure. Now we are looking for a sign. So the market came back here. Let's just assume if our support was here, the market came here, and see what happened. The market was actually in a consolidation, was in a sideward movement. It was in a consolidation, and at this particular level, what happened? We had a big bearish engulfing candle. See how this candle completely swallow. You see how this candle completely swallowed the previous candle. That is what we call a bullish engulfing candle. This is the same thing here. As simple as that. This is the same thing here. So this candle completely swallows this other candle, forming what we call a bullish engulfing candle. And anytime you have a bullish engulfing candle at a key support level, you buy without even thinking twice. All right. So at this point in time, you can see you are not gambling again, because you actually know what you are doing. Gambling only comes in if you are trading without knowing what you are doing. Because here you can see the market was actually consolidating and the sellers were in control. But the buying pressure that came in here was so powerful. That is why you can see this arrow says bullish engulfing. The buying pressure that came in here was so powerful in a way that this candle completely, the engulfing of this candle by this one shows you that the buyers in the market are more than the sellers. That means the buying pressure in the market is more than the selling pressure. All right. And anytime the buying pressure is more than the selling pressure, it means demand is more than supply. And anytime demand and supply, anytime demand is greater than supply, whether you are talking of a commodity or whether you are talking of a commodity, or you are talking of an asset, or you are talking of currencies, if demand is greater than supply, the price will go up, whether you like it or not. Those are the laws of economics. Those are the laws of trading. Those are the laws of demand and supply. All right. So at this point in time, you could already see that demand at this level is greater than supply. So you buy here without even thinking. You buy somewhere here, put your stop loss here, your take profit here, and boom, you would have already been out here with a profit. All right. So see what happened after that. After the market was going up, it gets down to this particular support level. We have this particular support level is what? Our structure. Now we are looking for a confirmation. When the market gets to this particular resistance level, when the market got to the particular resistance level, we had some consolidation. The first candle we had here, which could have even just given us a first. We've already spoken about this candle. I even forgot to mention about it. So you see, a signal can either be formed by with a combination of one pattern, or it can be formed with a combination of two patterns. The first pattern we have here is a shooting. It's a shooting star. All right. This is it. The first candle here, this candle is a shooting star. I already explained to you that this is how a shooting star looks. A shooting star is just a candle that looks like this, with a long wick, then with the hammer, with this inverted hammer or a shooting star. It looks like this. And this is a key. If a candle forms like this at a potential resistance level, you have to sell without even thinking. You have to sell because the buyers have already come in and the buyers are already pushing down the seller. The sellers are already pushing down the buyers, and they're going to win the battle. And anytime sellers have won the battle, it means the price will go down. The first candle we had here, which is this candle here, is a shooting star. And I already explained, anytime you see a shooting star, what do? You sell. So even if you were somebody who is very conservative, you would have still waited. When you were still waiting, what happened? When you were still waiting, this other pattern forms here. All right, this other pattern came in, which was a bearish engulfing candle. And when the bearish engulfing candle came in, it completely engulfed this particular candle. And when it completely engulfed this particular candle, if you see a bearish engulfing candle at a key resistance level, which is what I explained here, if you see a bearish engulfing candle at a key resistance level, what you have to do is to sell without even thinking. All right, because it is already clear. If you are looking for a confirmation, the confirmation is already there. If you are looking for reasons to sell, the reasons are already there. So you sell. You can see here we had two patterns that were telling you to sell. So even if you didn't sell here and you actually leave that money on the table, then I think maybe trading is not for you. You should better just go and learn how to do carpentry. All right? Because this thing is very clear and you can easily read it. You are not gambling because everything is clear. You know why the market is going down. You know why the market is going up. You know when to stay out of the market. You know when to go into the market. All right? So this was a key signal here. One signal, second signal, you say, even if you sold here, you say, you put your take profit here, your stop, you put your stop loss here, take profit here. That is a risk to reward of 1:5. Meaning, if you were risking $10, you make $50. If you were risking $100, you make $500. As easy as that. As easy as that. So that is how you use engulfing candles. Engulfing candles, which is a form of a dual candlestick patterns to generate signals in Forex. All right. So now let's go to the other one, which is tweezer. I like this one a lot. It is called tweezer bottoms or tweezer tops. The most important thing is that it's called the tweezer. If it occurs at the support, it is called tweezer bottom. And if it occurs at the resistance, it is called what? Tweezer tops. As easy as that. So how are tweezer forms? A tweezer is just a combination. Remember, we are under dual candlestick patterns. That means for any of these patterns to be formed, we need a combination of two candles, all right? And here, for a tweezer to be formed, we need a candlestick that look like this. Right? And if this form at the support, it will form what they call tweezer bottom. And if this form at a particular resistance, it will form what they call a tweezer top. And this occur all the time. And if the market is actually going down and out of a sudden you see these two candlestick patterns, wait for this is the first sign. These two candlestick patterns will combine to give you a sign. And since, remember, the structure to form, you not hear this somewhere. These have been brought to you out of experience and the way, because that is what works for me, all right? And the reason why I'm saying this is because if the market is going down and out of a sudden you see these two candles, what is that? We've already gotten our structure. Remember, I said the most important structure you can use is support and resistance. We are already using our support and resistance. Then, after we are looking now, since we've already had the structure, we are looking for a sign. And if we have a sign and a confirmation, obviously that is a signal. So our sign now is what? So that is a sign. That is an alert to say, okay, let's wait to see what happened. If you see this structure, anytime you see tweezer bottom, the next candle that comes after that should be able to give you a confirmation. If the next candle that comes after that is a bullish candle, then you have to buy. That is a buy signal. You have to buy somewhere here, stop loss here, take profit, boom, you are done. And if the market is actually going up and at a particular resistance, you see a tweezer top. If you see a tweezer top, wait for a confirmation. The tweezer top stands for a sign. All right, stands for a sign. Then wait for a confirmation. If the confirmation comes out and it is a bearish candle, sell without. That is a sell signal. All right, that is a sell signal. Put your take profit somewhere here, stop loss somewhere here, risk to reward of 1:5. Boom, you are done. As easy as that. So that is how you use tweezer bottoms and tweezer tops to be able to generate signal. And I told you the reason why. If they form at a particular support, you call them tweezer bottom, and if they form at a particular resistance, you call them tweezer tops. All right. So here on this chart, you can see here. Let's just call this our resistance, and let's call this our support. What happened here? The market was actually going down, and at this particular level here, this square you have here stands for our tweezer bottom. All right. When the tweezer bottom happened, I said, "What? Wait for the next candle. If the next candle comes out, and if it is a bullish candle, what do? You buy. The next candle comes out, and it was an increasing candle. So you would have bought somewhere here. You put your take profit somewhere here. This is a risk to reward of about 1:4. So if you are risking $100, you have about $400. You would have still come out of this trade with a winner. All right, so that is that about tweezer bottoms and tweezer tops. Let's go to what we call triple candlestick pattern. We've spoken about single candlestick pattern, or which are candlestick patterns in which you just need one candlestick to be able to confirm if the market is changing the direction, or you just need one candlestick pattern to be able to give you a particular signal. All right. After that, we move to dual candlestick pattern or double candlestick pattern, that you need at least two candlesticks to be able to confirm to you that the market is changing direction, or to be able to confirm to you a particular signal. Now we're talking of triple candlestick patterns, that you need at least three candlesticks. You need at least three candlesticks to be able to confirm to you that this is a potential pattern. All right. So coming to triple candlesticks pattern, we have what we call evening and morning stars. Evening and morning stars. And what are the properties of the evening and the morning stars? See, this consists of three candles. All right. So this consists of three candles with the first candle in the original trend. So these are the properties of an evening or a morning star. A morning star will occur at the bottom. The same thing I explained. The morning, like in the morning, the first thing when you wake up, the first thing you witness is the morning, right before the evening. So the morning star will occur at a particular support, and the evening star will occur at a particular resistance. So let's start with the morning star. That means for a morning star, for you to call that characteristics, for you to term it a morning star, the first candle must be in the direction of the trend. The market is actually going down, and the first candle here is what? It's a bearish candle. That's why it's a red candle. It's a bearish candle. And let's finish the sentence. So the first candle must be in the original trend direction. Second candle, and the second candle is the indecision candle. You can see this one. I already explained to you guys the meaning of an indecision candle. So the second candle is what? An indecision candle, because you can see the fierce battle between the buyers and the seller ended up with nobody winning the battle. So it forms what they call an indecision candle. All right, and then the third candle is what they call the confirmation candle. You can see here they say, and the last candle is a confirmation or a reversal candle. All right. So the combination of the three candles, it has everything. It has everything in one. It's like 3 in 1. It has the sign. It has a sign, and it has a confirmation and the signal in one. The first sign is that the first candle must be in the direction of the trend. All right. The second candle is the indecision candle, and the last candle is the confirmation candle. So you test, you confirm, then you launch. You test, you confirm, and you launch. That is how a signal is generated in this particular system. All right. That is that about a bullish morning star, and an evening morning star is the same explanation. Meaning, if you want to call a particular structure an evening star, it means the first candle must be bullish, The first candle must be bullish. So the first candle must be like this. I need my colors. So let me bring out my colors. So the first candle must be like this. All right. The first candle must be like this. Let me change even the color of this one to this. So the first candle, let me change the color of this. All right. So the first candle must be this. We have this one. Good. That is our first candle. And then, what is the property of the second candle? The second candle must be an indecision candle. We're assuming the market was going up, and the first candle, because we are talking of a triple candlestick pattern, a candlestick pattern that can only be formed after the combination of 3 candlestick patterns. The first candlestick must be in the direction of the trend, and the direction of the trend was a bullish market. That is why we have a bullish candlestick pattern. The second candlestick is an indecision candle. An indecision candle, this is how an indecision, let's change the color and then let's pick our color of an indecision candle. All right, so an indecision candle now will look like this. Let's change this and let's pick this. An indecision candle will look like this. This is an example of an indecision candle. So after the bearish candle, the second candle is an indecision candle. Then the first candle was in the direction of the trend. The second candle is an indecision candle. This candle is an indecision candle, and the third candle is a confirmation candle. So if this is occurring at a particular resistance, then the third candle will look something like this. All right, the third candle will look something like this. All right, so the third candle will be something like this. So can you see? This is the combination of an evening star. That is a combination of an evening star. The first candle is in the direction of the trend. Second candle is an indecision candle, and the third candle is a confirmation candle, which is a bearish candle. And what does this tell you? To say this is the confirmation candle, which is a bearish candle after the first and the second candle, and at this particular level, you sell without even thinking twice. All right, so that is how an evening star is formed. Let's go to our MT4 to see an example. You can see here we have our MT4. The market was actually going down. This is an example of a morning star. This is an example of a morning star. So the market was actually going down. Here we have our first candle, which is in the direction of the trend. The second candle, which is an indecision candle. You can see this second candle is an indecision candle. This one. This is the first candle. Number 1. Number 2 is an indecision candle, and number 3 is the confirmation candle, which is the confirmation candle, and it is in the direction of the opposite trend. Since it is in the direction of the opposite trend, it shows you that more buyers are in control. It shows you that the buying pressure is more than the selling pressure. So you would have buy at this particular level without even thinking twice. Stop loss here, take profit, boom, you are already out of the trade. As simple as that. That is how you use that triple candlestick patterns to be able to generate signals. Another triple candlestick pattern we have here is what we call 3 white soldiers or 3 black crowds. All right. So what is a 3 white soldiers? 3 white soldiers. They say 3 white soldiers occur when long bullish candles follow a downtrend. Right? So when if we have a downtrend, then out of a sudden you see three long bullish candle occur. It means the soldiers. That's why they call them the white soldiers. So if you actually have a downtrend, then after that you see some candles come out of nowhere. Some bullish 3 candles come out of nowhere. That is a reversal sign, and that is called the white soldiers. All right. And the opposite, when the opposite occurs, it is called the black crowds. The opposite will occur when the market is actually going up, then out of a sudden you see three bearish candles. You see some 3 bearish candles occur out of the blue. See what happened here. This is an example of white soldiers. And for white soldiers, I explained that if the market is going down, if the market is actually going down, and out of a sudden you see three opposite candles, 3 bullish candles occur in the opposite direction on the same, that is subsequently, that means one candle follows the other, it forms what they call white soldiers. All right. And the same thing, remember, if this was our key support and this was our key resistance, then we're going to buy somewhere here without even thinking. We're going to buy somewhere here. This will be a signal. So you actually press buy, put stop loss, take profit. The same thing happened. The market was going up. This was an uptrend. And when the market got to this particular resistance, see what happened. Out of the blue, the sellers came in with force. The sellers came in. They won the first battle, the second battle, the third battle. And they form what they form a pattern which is called 3 black crows. After these 3 black crows, you see the market dropped immediately. You would have bought somewhere here. The market dropped immediately. All right. So they just form because the buying and the selling pressure is very, very high, and at that particular level you are already setting that okay, it is either demand is outweighing supply or supply is outweighing demand. It is either the buying pressure is more than the selling pressure, or it is either the selling pressure is more than the buying pressure. And that confirmation can be gotten once you see this first pattern or this second pattern, and they are key reversal patterns. All right. So I hope you guys are taking down the points at this particular level. Let's take a recap. Just like I said, please don't be lost. All right, don't be lost. At this particular level, we have already spoken about. We are talking about candlestick patterns, and whether you like it or not, any candlestick pattern which is formed or any signal which is given to you. If you are somebody who likes fish to be given to you, if you are somebody who likes to be spoon-fed, all right, and if a signal is given to you, the way that signal is generated, 90% of the time is using the same patterns I'm teaching you, or is using the same pattern I've taught you on this particular lesson of today. We've spoken about single candlestick patterns, which you just need one candlestick confirmation. We've spoken about double candlestick patterns. You need a combination of 2 candles to form one pattern. And we also talk of triple candlestick patterns, that you need at least 3 candlesticks to confirm, to give you a confirmation of a pattern. Now, let's go to our MT5. Let's go now. We're talking like an abstract. Even though I'm giving you guys live demonstrations, let's go to our MT5 so that I can be able to show you this example on MT5. Let's go to our MT5 as if I was just starting trading today and generate signals. All right. Let's go to our MT5 and be able to generate signals as if you were the one. All right. So with that being said, let's go to my chart so that I can be able to show you most of these things. Okay, so you can see here we are on our MT5. This is MT5. I'm using IC Market, all right? And by the way, if you want to use the same broker I use, because I used to say I say this every day. You might know how to trade Forex. You might know how to do all the analysis. You might know how to come up with all these patterns. But if you are not using the right tools, if you are not using the right broker, then there is no assurance that you will make any money in Forex. So if you want to use the right broker or the same broker I use, then just go on the video description below, and I've been able to come up with the same brokers I use. Even on my live videos that I do, those are the same brokers that I use on a daily basis. So just go on the video description and you'll be able to see a link to be able to sign up with any of those brokers. With that being said, we have our MT5 here, and if we have to scroll on our MT5, let's just look for a key level. Let's just look for a key level to draw our support and resistance. Remember, let's not forget the main goal behind. For you to come up with any signal in Forex, you need a structure, you need a sign, and a confirmation. All right, you need a structure, you need a sign, and a confirmation. So now we want to be able to generate signals. This is your first time generating a signal. This is how you do it. So we are on Great Britain pound, Australian dollar, and we want to generate signals from this chart. All right. So I'm just scrolling. I'm just going. I'm looking for a structure. All right. I think I can be able to see a structure here. All right. Good. I think there's a structure here. So let me reduce this a little bit. Good. Good. So let me. All right. Good. Perfect. So I like this. You can see on my chart here. Let's just assume the current market price is where it is now, but let's backtest. We are doing our backtesting. I want to show you how this. You don't need to even go far to see the signals being generated over and over again. That is why we are doing our backtesting. All right. So let's do our backtesting here to see the signals we would have generated. The first backtesting we have here, we have what? We have our support. We've been able to draw our support and resistance. You can see this is our support. You can see this is our support, and here we have our resistance. The structure, the system to come up with this, with the system to come up with any signal. You have what? You have a structure. You need to be able to have a structure. Number one. You need to now have a sign, which is number two. And number three, you need a confirmation. All right. So this is the system to come up with any signal. I want us to be able to use the same system to deduce a signal from this chart. So since you've already known that, let's use the same system now to come up with a signal. All right. Good. Our structure. This is our structure. Sorry, resistance. This is our structure, support and resistance. And now let's just assume the market is somewhere here. The market is trading somewhere here. And we know that the resistance is somewhere. Let me make it a little bit good. Let's just assume the resistance is somewhere there, and the market is currently trading at this level. Since the market is currently trading at this level, we are waiting for the market to get at this particular point so that we can see if there's a confirmation that the market will change direction here. Good. The market went up to when it got to this particular level, what happened? See, I want to be able to show you the same patterns we've spoken about. See, the same patterns occur. When the market got to this particular level, the first pattern we had was this pattern. What is this? This is an example of a shooting star. A shooting star. This is a shooting star. And where did that shooting star occur? The shooting star occur at the potential resistance. Anytime you see a shooting star occur at the potential resistance, that is a sell signal. All right. And if it occur at the potential support, that is a buy signal. So the first signal we had here, the first sign we had here was this this shooting star. And immediately we had this shooting star, we would have sold somewhere here, because immediately after the shooting star, which is a sign, you can still be conservative and wait for a confirmation. Waiting for a confirmation, what happened after that? We had this bearish marabuzu. We've already spoken about the marabuzu. The marabuzu. All right, we've already spoken about this candlestick pattern, which is just something like this. It's just something like this with little or no wick. After that shooting star, what happened? We have that same candle. And anytime you see this same candle, it means if it comes out and it is a bearish candle, it means the bearish power, the bearish pressure is higher than the bullish pressure. The bearish pressure or the selling pressure is more than the buying pressure. Anytime the selling pressure is more than the buying pressure, you sell. So even if you were conservative and you didn't sell here, this was still a sign you would have sold somewhere here. All right. So you see how clear this is. So this is already our big number one signal. Our big number one signal that you would have come out with at least, if we are talking about this chart, we would have come up with at least 65 pips. All right, would have come out with at least 65 pips. Good. After you've placed your trade here and you're already out, you knew very well, you know very well that there's still another support waiting for you down here. The market is trading and coming down. At this particular point in time, you can see, because this can be a support is not just a line, it can still be a zone. This is our zone. The whole of this zone stands for our support zone. The market came to this particular support, and what happened? You have a full, the same candlestick that I explained up here. The same candlestick, which was a shooting star, occurs down here. Down here, it is instead called the hanging man. All right, if it occurs up here is a shooting star, and down here it is called the hanging man. And I explained to you, anytime you see a hanging man occurred at the support, at the particular support, or anytime you see a candlestick, even forgetting the name, anytime you see a particular candlestick that looks like this, it looks like this, then with a long wick, it looks like this with a long wick, occurring at a particular support, you have to buy without even thinking. So you would have bought again here. That is our second signal, and you come up with at least 65 pips. That's 65. You are already up. You are already up with more than 120 pips. That is not magic. Good. Come with me. So now we've been able to generate two signals using which patterns? We've used shooting star and we've used the hanging man. Let's go to another pattern. The market came back up here. The market came back. Let me make my chart clean, except the signals which have been generated. This is the first signal and the first and the second signal. Good. The market came up here. When the market came back up here at the particular resistance, what happened? Look at this candle. Very, very clear. What kind of candle is this? What kind of candle is this? Long red candle. This long red candle that shoots directly from the resistance down is called what? That is strictly a bearish engulfing candle. Bearish engulfing candle. All right. That is a bearish engulfing candle straight from the resistance. See, our resistance is there. This thing is not magic. It happens all the time. The reason why you keep blowing your account every day is because you don't have that patience to understand the dynamics, to understand what is going on. Because this thing happens every day. See, from the resistance, what happened? Boom, the market shoot directly down, forming what we call a bearish engulfing candle. And anytime you see a bearish engulfing candle occurring at a particular resistance, that is a strict sell signal. So you sell without even thinking twice. So this is our third signal. All right, that is signal number 3, our tech signal. And the candlestick pattern which we were using here was what? The bearish engulfing candle. As simple as that. I'm not the one fabricating this. It's already there. I'm just making you to be able to see it. Please, 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 please. I want you to let me know on the comment section. Let me know on the comment section. I want you to be able to go to your MT5, to your MT4 or your MT5 at the end of this video and tell me the number of signals you were able to come up with just using this explanation on this video. Please try to do this and let me know. And if you're already on my Telegram channel, obviously on my Telegram channel, the video will be there. Also, let me know on the comment on the video on the Telegram channel how many signals you were able to generate, how many pips you would have made, how many millions you would have made, how many properties you would have made if you knew how to do this. All right, it's not yet late, at least. It's not yet late. I'm able to. You should be able to thank God. I'm here to give you the information now, because from here onward, you will be able to generate your own signals, and that is what I'm happy. That is what I'm proud of, because the main reason why I'm here is because to be able to help another person, to be able to impact another life. So by the end of this video, at least you'll be able to generate your own signals. All right. So that is the main reason why I'm here. And if at the end of this video you are able to generate your own signals, then I'll be the happiest person on earth. All right. So this is already our tech signal that would have taken that same day. And when people give you signals to buy Great Britain Pound, AUD, TPDs, TP stands for take profit, SLDs stands for stop loss. This is how they generate the signals. No other shortcut. This is how they generate the signals. And 80% of those people even give you those signals, they don't know it detailedly. They don't know candlesticks detailedly. And even if they knew candlestick patterns detailedly, they don't know the dynamics detailedly. But now, you don't only know of candlesticks, you know of the dynamics. You know of the fake signals, because there are some of the signals that are fake. There are some of the signals that are trickish. There are some of the signals that you actually think maybe this is a signal, but it is what we call stop loss hunting. And with the combination, you'll be able to choose the right one. All right, here we were already at our resistance. Coming back, you can see what happened here. I can't emphasize this a lot. Let me put our support here. See what happened here. I can't emphasize this a lot. See, we already had another signal here, and we saw somewhere here. Our take profit was somewhere here. Our stop loss was somewhere here. So the market kept going down. By the time the market got here at this particular level, would have already been out. And by the time you are out, the game is not yet over. The game is not yet over, because by the time you are out of that trade, the market has already come back to the support level. So you see how it is very, very important for you to be able to know how to draw support and resistance accurately. That is why in our previous videos, I'll be able to show you how to draw sniper support and resistance. Smart support and resistance that work like this. You can see how the support and resistance is working. It's because I know how to draw them, and if you know how to draw them, your signals you'll be able to have accurate signals. All right. So come with me. After we had the text signal here, your trade was already closed. You already banked your money, or was already in your bank account, or the pips were already there. Now, our next trade, the last trade we spoke about, the pattern, the candlestick pattern that formed that trade was what we call the bearish engulfing candle, or the bearish engulfing candlestick pattern. See what happened. See what happened after that, guys. See what happened after that. After you got to a particular support, what happened? See this. What kind of pattern is this? You see this candle, then this long candle that completely swallows or completely engulfs this one. What kind of candle is this? And if it happens, it occurs at a potential support. If it occurs at a potential support and you see a bullish candle that completely engulfs a bearish candle, what kind of pattern is that? That is a bullish engulfing candle. A bullish engulfing, right? Engulfing candle. And anytime you see a bullish engulfing candle at a potential support, you have to buy without even thinking twice. You have to buy. So you would have bought somewhere here, but you put your stop loss somewhere here and your take profit. So even if you were conservative and you want to just go for 1:5, your take profit will be somewhere here. And see what happened. Immediately your take profit was here. Boom. Within about if this is a 4-hour time frame, so within 2 days, because each of these candles stands for 4 hours, so within year and year was 8 hours, 12 hours. So from year to year was just about 2 days. So within 2 days you already hit your take profit of about 80 pips. That is that. If you can make just 80 pips per month and you know what you are doing, it just depends now on your account balance. You can become a millionaire just with those number of pips. If just imagine you are trading a $100,000 account and you make just 80,000 profit and you're using just 10 lot size, that's already more than $30,000. Or just the most important thing is knowing how to make the pips conservatively and consistently. All right, see how this thing is very nice. This is another pattern that you would have used, and this pattern is what? A bullish engulfing pattern. All right, so I've just this if you keep going, if you keep testing and going, you can see this one is a shooting star, this one is a morning star, this one is an inside candle, an indecision candle, and the next one that so you will see these candles over and over and over. And I've just used this example to be able to come up with more than. So this is the fourth signal. All right, this is the fourth signal I've generated using just this structure. I've generated this is the third. I've generated 2 sell signals, and what? 2 buy signals. 2 sell signals and 2 buy signals, and all the signals were positive. All the signals were all winners. So I had 100% accuracy with those 4 signals. If you can have just 4 signals that are positive, 4 signals that are all accurate within a week, trust me, you make that money in Forex. You make that money in Forex. So guys, with that being said, I think let me see if we still have any other thing. Let me see if we still, let me try to minimize this. Good. So with that being said, let's see what we have here. Good. So with that being said, I think we've come to the end of this video, and from my explanation, from what I have explained on this video, if you see me with my money gun, know this topic is very, very important. Know this topic is what, if you understand, you'll be able to make that money rain. You'll be able to make that money rain in Forex. So if you see me with my money gun and I'm talking about a topic like this, please guys, take it very, very serious. Take it very, very serious. So now, let me make a recap, all right? At the end of this video, these are the things you should be able to ask yourself. The first thing you should be able to ask yourself, do you know what a candlestick pattern? Do you know what is even a candlestick? Do you know how the candlestick was formed? Do you know the evolution of candlesticks, or why people even use candlesticks? After that, how do you generate signals with candlesticks, all right, with candlestick patterns? When you want to generate signals with candlestick patterns, you use what we call candlestick patterns. How many type of patterns are there? We have basic candlestick patterns, which is just a basic formation. We have single candlestick patterns, which you need just one candle to give you a confirmation of a market continuation or a market reversal. You also have what we call double candlestick pattern or dual candlestick patterns, which you need 2 candlesticks to either tell you if the market is continuing or reversing. And after, you need a triple candlestick patterns, which in that case you need at least 3 candlestick patterns to tell you if the market is continuing or the market is changing direction. After that, we've been able to do a live demonstration, which I was able to show you how to generate those signals on your MT5. So the main exercise that I want you to do, please do this exercise for me. So this is the exercise this is the exercise I want you to do. I want you to be able to open your MT5 and do backtesting in as many currency pairs as you can. Do backtesting using all these patterns that I've been able to explain. All the patterns I've been able to explain. Try to use them to come up, to do backtesting and go through all the pairs to see the signals that you would have generated, to see the money you would have made, to see the millions you would have made. So try to do backtesting as many times as you can to be able to familiarize yourself with these patterns. And after you've done that backtesting, on a live market, when the chart are unfolding, our advice, you can just go with something like a 1 hour time frame, or even if no matter the time frame you are using, the candlestick work the same. They work the same. So you can even just use something like the 4 hour time or the 1 hour time frame and use a live market. Draw your support and resistance, or draw your key levels. And when you draw your key levels, as the market gets to those particular levels, be able to look for a confirmation. It doesn't mean anytime the market gets to a support or resistance, you're going to either buy or sell. No, there are sometimes the market can actually reach in a particular support and you wouldn't take any action when there is no confirmation. So you only take an action at a support or a resistance if there is a confirmation. And what gives you that confirmation is a candlestick pattern. All right. So use now on a live chart, draw your key resistance level, and when the market reach on those key resistance level, look for a confirmation. If you have maybe a full engulfing candle, maybe shooting stars or hanging man, or maybe you have 3 white soldiers or 3 black crowds, or you have a doji. So try to use all these patterns now to look for a confirmation and come up with a signal. So try to be able to generate your own active signal, put your own targets and stuff like that. So with that being said, on our next videos going ahead, I'll teach you how to be able to use support and resistance to pick what we call sniper. You know, sniper entries, you pick them, right? So I'll be able to teach you how to use support and resistance to pick sniper entries. With that being said, guys, if you've gotten some value from this video, which I know you have, please leave a thumb up. I keep making, so please leave a thumb up on the video. Please share the video to someone, and if you are watching and you haven't subscribed, I know you might forget. If you are watching and you haven't subscribed, please hit the subscribe button below to be able to subscribe to the channel. And if you want to join a community of forex traders that share ideas on a daily basis, then check the video description below where I have my Telegram channel link on the video description. And also check the link below to be able to check the best forex brokers that I use that you can also use. Stay profitable, stay happy. Until then, I'll be able to see you guys on another video. Peace.